Hey, good evening, everyone. This is Abdel with Ratio Trading here, and let's take a look at the S&P 500. So, a bunch of you guys have been sending me questions regarding where I think this is potentially going. It's difficult to say on a day-to-day basis right now. To be honest with you, I'm not really taking any more long positions on the S&P. I'm not taking any shorts either, but I'm not in the S&P. I'm not playing the S&P. And the reason is just really it's just in this sort of flux state. It's kind of just hanging out here. And when you look at it on sort of this weekly scale, you'll just see that, it rallied up hard after the drop here. And then it's kind of just been chopping around here for the better part of a few months now. It's kind of been in this range, right? So until something more dramatic starts to happen, from my end, there really isn't that much. Now, when I look at the bigger picture and I look at the monthly, I see some topping action here, but at the same time, I saw a lot of topping action going here. So this thing has just kind of continued to grind its way up. So that's why I'm not suggesting we get short, but I'm not really getting long, mostly because I see a lot of signals suggesting that we may be in for a correction. So right now, I don't have anything telling me to get long. I don't have anything telling me to get short. Once I get one of those things, I'll play it. But right now, there's just nothing. The other market I've been also getting a lot of questions about is Apple, and we're 2 weeks away from their earnings, in which a lot of people are expecting that they're going to announce record phone sales, amongst other things. So Apple, when it broke above this high, my expectation was that we were going to see there's a 70% chance we're going to get to the 127. It didn't quite get to the 127. It hit about 120, about $4 or $5 removed from the 127, in a sense sort of pulled back. I don't see this pullback, this minor pullback, quite frankly, as it's stopping its trajectory to that area. In fact, I think that when you look at a one-to-one measured move that dates back to 2009, I think that this is what's going to happen long term. Now, it might take another year or maybe even two, but that's what I expect. My expectation is that a one-to-one measure move is likely going to happen, and that's going to put it into the 140 to 150 range over the next, I don't know, if we use this line as a way to time it, it's saying sometime next year. I think it'll happen sooner than that, and you can see that this has already happened somewhat sooner. I wouldn't be surprised to see it happen this year if I'm being honest, especially with new products and stuff like that. So I expect it to get to the 127, and then I expect us to start pushing through there, and I think we'll start seeing that happen in the next 6 months. I legitimately believe that within the next 6 months we'll see it pushing beyond the 127 extension. So for me, I continue to stay long. I am definitely not taking any shorts here. That's the play on Apple for me right now. All right, last market, but obviously not least, is oil. Everyone's been asking me about this. I've been talking about it with so many people. Where is oil going? You can see I have two horizontal lines drawn right here. My expectation is that it's going to get into this range. I mean, it's pretty much there. My expectation is it's going to get pretty much here before it finds any level of support. Now, I do think it will find some area of support here, mostly because one of the indicators I like to use is the RSI, and when I look at the RSI here, you'll see that this thing is insanely oversold, right? So when you get these extreme overbought or oversold conditions, I mean, there hasn't been too many instances, but you can see like a little bit oversold. This is years ago, right? But when you look at when you get these instances of extreme overbought, like you can see got overbought here, and then we saw like that dramatic crash of 2008 and 9. We're in like extreme oversold condition. So I expect that this support area, which has proven to be supportive in 2009, it was also resistance, you can see, back in 2000 to 2003-4. So this is an area where I think a lot of buyers are going to get in. So I probably would continue staying on the short side until it gets into this area between mid-30s to low 40s. Once it does that, though, what I would do is start drilling down into the smaller time frame and look for buying opportunities. It's aggressive move, but I do think it will be good for a bounce. And a bounce on a market that's lost half of its value, if not more, in the last 5 months, right, or less, really, can jump 20 to 100, 20 to 40% in a very, very short span. It wouldn't be unreasonable to see this thing bounce from, say 35 to like 55 or 60 in just a month or two. So that's what I'll be looking for in the short time. I'll keep you guys updated on that. Otherwise, if you guys have questions, hit up ratiotrading.com and leave a comment, and we'll see you guys next time.